My name is Andrew Flamm. As Bruce had mentioned, I'm the director of the Pace University Small Business Development Center. So we are an organization that works with individuals who are both looking to start a business as well as grow a business. So we work with a small percentage of Pace students and alumni, but the vast majority of the folks that we work with don't have an affiliation with the university. They have the next great idea for, a tech startup or a coffee shop or whatever else it might be. They also may be operating businesses presently and are really keen on being able to figure out how to grow that business. So we have dedicated business advisors that meet with individuals who are either, as I said, building or growing their business. All the services we provide are free, and we've had some really tremendous impacts as we've gone. We work on a wide variety of issues. Tonight I'm going to talk a bit about small business financing and touch on some of the key program areas that we work on at the Small Business Development Center. I'll just say SBDC will be the acronym, so if you hear me break into that at some point over the course of the talk, that's what I mean. So we do a wide variety of things, as I said, sort of helping business owners and entrepreneurs access financing, whether it's connecting with a small business loan, whether it's accessing equity, and a wide variety of other items. We do have a very comprehensive array of market research available, so outside of the classroom clearly, but if there are live breathing businesses that you all are working with and want to find some information with respect to demographics about the marketplace, those are things that we can do and have done quite a bit of. Legal structure, looking at how to think about whether to incorporate your business, whether to put together some sort of formal partnership structures. Those are things that we kind of deal with on a regular basis. Marketing, communications, and sales, clearly big issues as businesses are starting to grow. And putting together business, financial projections, thinking about how to get from point A to point B, and thinking about how your business might be able to get there. So, without further ado, this is about kind of, again, a bit about who we are, but want to touch sort of briefly about kind of, effectively, many of you, as Professor Wackenheimer talked about, really are looking at or may have already started businesses. Clearly, there's a much lower barrier at this point. You can be startups. A lot of it can be remote. It's not kind of the brick and mortar of our respective parents' generation. You really can have different models. But the Small Business Administration, kind of an agency that we work very closely with, kind of a telling fact, maybe a little scary, but half of the small businesses fail within the first 5 years. So I guess it really instills kind of the need and importance of really doing your homework and getting things together first. Today I also want to touch a bit on kind of a couple of financing sources. Again, crowdfunding, which I'll spend a bit of time on, and the different models that exist there. And on the small business lending side, community development financial institutions, which are really key community-based partners that are outside of like the Citibanks and the Chases of the world. We're looking at kind of more community-based focus that are a bit more flexible in terms of who they work with. And the Small Business Administration, as I said, I'll touch on a couple of their key programs as well. So let's start with crowdfunding, and that may be something that kind of has been in the topics here a bit. Clearly, it's key to a lot of entrepreneurial pursuits. Kind of the how does it work aspect, kind of the participants looking at both project initiators, folks who are looking to kind of raise funding through these efforts, looking at different supporters, whether you're making a financial investment or whether you're putting forward money in return for t-shirts and cookies, whatever it might be. And the platform, there are different kind of models and structures that exist on that front as well. There we go. So I'll start with the debt-based crowd lending aspect of it. So you have individuals who are looking to kind of raise money. We'll look at opportunities to figure out how am I going to raise money for this. I can't go to my Chase and Citibank. I'll stick on those two for this evening. So we look at kind of how to be able to put something together. You look at putting together a package of information about yourself, who you are, what you're looking for, and then investors or participants can sort of see and determine whether they want to be part of that as well. Rewards crowdfunding, Kickstarter, as I'm sure many of you know, is a good example of that, where you're looking at not necessarily getting an investment in terms of that particular model. You're looking for some sort of exchange. So in return for the $100, you get baked goods, you get T-shirts, you get special access to tickets, whatever else it might be. So it's more of an exchange program rather than kind of an actual financial investment. A couple of other examples I won't talk about too much tonight, but on the equity side, you're looking at people that are kind of looking at more about making an investment and getting kind of an ownership piece in terms of how the business works. So I'm operating a business. I'm looking to bring on folks that I want to be part of my mission and my vision, and I'm willing to kind of sell a part of my company to be able to raise those funds. Real estate, you can have look at packages or individual mortgages, how you can be part of the investment structure there. And very briefly, philanthropy. There are many, many models out there. I know that PACE has one where you can kind of get involved in terms of crowdfunding prospects on that front as well. So why do entrepreneurs use crowdfunding? We'll look at kind of both the financial reasons I touched on briefly earlier in terms of, when you look at a lot of startup businesses, a lot of entrepreneurs really don't have the financial background, the financial wherewithal to really go into a mainstream kind of financial institution and say, hey, I need a loan for X. They're looking at other options and other availabilities out there to sort of see, what other models exist. So, if you have poor credit history, maybe you have limited credit history, maybe you're in a risky business of some sort. Startup restaurants are always a very good example of, folks out there that kind of have the next great restaurant idea, but so many restaurants fail that a lot of banks are really not keen on doing that sort of thing. Expanding your circle of supporters, this is a model where really you can kind of say, let me get friends and family on board. At $25 a clip, how many of those can I raise to be able to kind of get me on the path towards what I need and to be able to kind of expand your prospective universe of participants. And speed. If you're going to a bank, it's going to take weeks or more to be able to get your money. Through this model, there's a very finite time period. You're able to either raise your funds or not. You'll be able to know quickly whether you have that ability to be able to pull that together. On the non-financial side, we talked a bit about, I guess there's the equity model, but for non-equity related crowdfunding sources, you're going to be able to kind of still retain 100% ownership of your business, which for many folks is kind of very important. You want to be able to control kind of the direction and the vision of what you're all doing. To be able to attract additional investors, you're going to look at demonstrating that there's a market. So you want to be able to say, hey, not only are friends and families believing in this, but I've got all these other folks that are signing on that may be half a world away that think this is a really great idea. So be able to demonstrate kind of what that might look like. And the third thing I know that was key, I know that Professor Bockenheimer, one of the speakers at one of your events, had spoken about kind of getting feedback in advance of kind of a much larger launch. So you can sort of put it out there to sort of say, this is my product or service, and to be able to kind of sort of take feedback from investors or prospective participants to say, I don't quite like the way this works, or maybe to kind of be able to kind of make those revisions before you go much wider. So I think those are kind of some interesting prospects. On the supporter side, now we're sort of talking about the people who are making investments and contributing towards these ideas. So you have folks that want to be part of a cause. It might be a particular mission. It might be an activity or a business that's opening in your neighborhood that you really kind of feel strongly about and you want to be part of. Kind of being ahead of the curve, really looking at opportunity to be part of something special. You think this is going to be a game changer in a particular area of medicine or whatever it might be, and you really feel strongly about it, you can do that as well. And the third piece is sort of financial. In certain models, people are looking to kind of make a buck on it. So you look at places like Lending Club and Prosper.com where the interest rates are incredibly high, but there's a great deal of risk involved in that. So thinking about those models is an option as well. Some risks and barriers, I think in terms of the failure to meet campaign goals, a lot of the way that works is that you're trying to raise a certain amount of funding, and if you don't get there, you get, in some models, you get nothing at all, and that could be a real drain on the morale of the business, so that could be hard. Unable to deliver, let's say you do in fact get the money for your campaign, and you're on the hook to actually deliver something, so that could be, if you don't deliver, I guess that's could be kind of the end of the business right there. Plagiarism is a concern because you're putting your ideas and thoughts and products out there to a wide universe. So you have to be very careful in terms of what information you're putting out. And the cost of capital, I sort of touched on Lending Club is just an example, but these are many multiples, much higher in terms of interest rates than some of the other folks that are being able to provide money to small business owners. One example I will touch on briefly is Kiva Zip. Kiva is a program that enables individuals to make investments, as it were, kind of worldwide. And there's a program here that's targeted in New York State that we've recently gotten involved in, where individuals who are looking to kind of raise funding can access 0% interest loans, which is incredibly beneficial. They're much more modest in size. But if you have individuals who are looking to kind of start businesses and raise funds, this has been kind of a really good model. You need to be endorsed by a trustee. That's a wide variety of community-based lenders and technical assistance groups such as us to be able to kind of get individuals kind of the money in place. This also sort of ties into the network of your supporters. So you want to be able to, again, sort of build on the supporters of friends and family, be able to sort of say, hey, we believe in this, so you can kind of be able to tap into this wider range of supporters and investors more widely. All right. So that's, I wanted to sort of wrap up the piece on crowdfunding, and I think I'm going to shift now to talk a bit about some of the more kind of traditional financial models and avenues that are available. So we'll go from there. So shifting gears to talk briefly about community development financial institutions. These are credit unions, community-based lenders, organizations that work in specific neighborhoods oftentimes, or they may work serving particular kinds of industries to be able to help them really serve where they're working. So you think about a credit union as an example. You're trying to figure out ways to get people that have never had a bank account have a bank account, to develop credit. Maybe they have no credit. Maybe they're from another country, or maybe they've just never used credit cards before, to be able to give them the opportunity to start to build credit so they can get part of the mainstream financial opportunities. These groups play an incredibly important role in terms of helping small businesses and entrepreneurs be able to build. And we have a wide array of organizations like these that we work with for people who are looking to try and get modest loans to be able to kind of start to build themselves up. They're really able, and they're built to kind of take on more risk than the traditional banks. They're not just looking at your credit score. So if your credit score is 0 because you've never had any, or if it's bad, they're willing to look at other opportunities. What is the history of the business? What kind of collateral might you have? Do you have some reasonable financial projections about how things are going? And we'll talk about that in a little minute. So I think these are just kind of really key and valuable groups that could be a very good resource for entrepreneurs. I also wanted to talk briefly about the Small Business Administration. This is an agency, it's a federal agency that, as Professor Bockenheimer mentioned, does provide us some funding. They're really in place to provide and encourage financing, access to financing for small businesses throughout the country. They really support a wide variety of programs, both on the technical assistance side, which is what we do, as well as a couple of lending programs, and I'll touch on 2 of them. One is a program, and this is kind of into the weeds a little bit, but I think in terms of the 7A is a loan program where they're providing a guarantee. Effectively, what they're trying to do is sort of say to a bank, you may not make a loan to this individual business on your own, but what if we step up and make a guarantee up to 85% of that loan? That kind of puts the lending institution in a position to say, maybe I wouldn't have taken on this loan otherwise, but with this guarantee, that would be something that I would consider doing. And it's been a very, very powerful opportunity for banks and for a lot of the clients that we work with to help them get the financing they need. And this can be loans that are modest in size, but can be right up to $5 million. So a wide variety of businesses tap into this, both for the working capital that they need to be able to operate their business, as well as for physical, tangible items. Maybe they're buying a building. Maybe they have a huge piece of machinery they have to be able to purchase to be able to enable them to take on a new contract. So it's been very impactful, and I think it's been something that's, again, we've worked a lot with in terms of helping our clients. A second program is a 504 program, where through this program, individuals really only need to put up 10% of the money of the total project cost to be able to kind of get a loan. The SBA works with various partners, again, and some lending institutions to be able to help get that money out there. And it could be, again, very, very impactful, in particular for real estate projects where, again, a lot of these financial institutions would not be taking this on without the support of these sorts of programs. I'll touch briefly on some of the kind of the requirements and things that folks look for. Tax returns, for your individually, as well as if you have a business already, they're always keen on kind of seeing how things are going. A personal guarantee and collateral I can talk about a little bit. That's effectively saying, if you're getting a loan from an organization or from a lender, the personal guarantee is saying if the loan goes bad, effectively you're putting up your personal wherewithal to be able to say, I'm going to make this loan good. So even if the business does not go well, you're just kind of still on the hook for paying for that. On the collateral is really looking at, in sometimes, let's say I'm buying a $50,000 clicker. If I'm paying for it, this is my collateral. If I'm using, as time goes on, obviously this clicker is going to be less valuable, but that's kind of one piece of collateral that kind of a lending institution will look for. If there's other collateral that you have that kind of will help build the case for it, it could be personal assets, it could be a home, a car, and lots of other things that give, again, the banks an understanding that you have the wherewithal to be able to pay back if the loan goes bad. The SBA does charge fees for these programs, but again, kind of if the thought is, either you go to a lending club where you could pay 40, 50% or more interest, or pay kind of a small percentage when the loan gets closed and pay more of a market rate, it's really been a very good deal. I'll touch briefly on statement of cash sources and uses, and this may be things that are kind of central to a lot of the work that you all have done in terms of putting together business plans and having a sense of next steps forward. This is really key in terms of helping make your case with various lenders. Being able to clearly say, you're looking for a certain amount of money, what are you going to use it for? That's kind of really the uses aspect of it. The sources is, you're looking for a loan of X, and you're able and willing to put in amount of Y, really to be able to help bridge that gap. So that's really trying to be able to be as specific as you can, sort of put up there supported by quotes. So if you have invoices or things that you can reference in terms of, where you came to those numbers, that's always very helpful. So financial statements, these are kind of the key financial components of what they look at. So the income statements, cash flow, and balance sheet, and I'll go through each of these briefly, and sort of to think about, how you can kind of make that case, to a lender or to an investor. So this is smaller than I intended, so I apologize. But sort of looking at kind of the income statement, thinking about kind of what your revenues are. If you have something, think about kind of a restaurant as an example, a cost of goods sold, kind of that gets you to your gross profit. So that'll be kind of the differential and what you're going to be able to put forward to cover your operating expenses. And there are a wide variety and a wide category of them. So if you're looking at things like payroll taxes, might not be something on top of mind, but if you're working and bringing employees on, you want to make sure that you cover things like that. And again, we work on this through our center, on a daily basis. Whoops, there we go. So cash flow, on the other hand, is how much money is coming in and how much money is going out. So in this circumstance, I'm not sure if you can sort of see, but in this one, there is there we go, term loan, $50,000. So that gives you a sense of from day one in April, you're getting your $50,000 loan. That's part of the cash. That's part of the money you'll have to operate your business. And the owner investment of $25,000. That sort of demonstrates, hey, I as an owner, that's what I'm putting forward. And then you look at on the lower half, that's kind of looking at how much cash is going out. So in future months, cash coming in is really going to be all your sales, and cash going out obviously is the cost of your operations. One thing else I should point out here in, let's see, the second to bottom line, the owner's draw, which kind of is indicating really that the owner of the business is not taking money out of the business, for the first 6 months. So this is kind of a further demonstration really of the business owner's commitment to the operations. And the last piece I'll sort of touch on is the balance sheet, really looking at kind of a difference between, again, the assets, what you've purchased with that $50,000 plus the $25,000 investment. And then as you can see, there's a long-term debt piece here, which is kind of the amount of money that's ultimately due back, for what you're looking to secure. So, anyway, there's my contact information. I know it's probably a great deal to digest, but happy to take any questions.